modules and applications. The database is same. All the applications, different applications, they store in the form of different tables. Data is stored in different tables of each application. But the data is stored in only one particular place. So that's why enterprise ERP always will have an added advantage that you will get the right information instantly. Whatever the information you want from any of the applications, and also to have the combined information, then you will get it easily from the because same source, one database. So that's why you will get the information very fast and very accurate information you can get. There is no need to manually compile the information again for you. So that's what an ERP is actually. The Oracle Fusion Cloud Applications is an integrated software that covers the entire operations of an enterprise to record their transactions across the globe. It has several offerings. That means in ERP, Oracle Fusion Cloud Applications has got several offerings. Previously, we used to call them as a product families. In the up to e-business suite, we used to call them as product families. Oracle like financials, project for project accounting previously, Oracle Cloud HCM now, Oracle HCM before. This also supply chain was there, manufacturing was separate. Like this, we have got different product families. We call them in e-business suite. But now we are calling them as an offerings. One offering will have some particular applications, a group of applications. Financials is an offering. In the financials offering, we have got all the core modules of financials is general ledger, accounts payable, account receivable, cash management, fixed assets. Whereas in the Oracle Fusion Cloud Projects portfolio, right, the here project foundation is there. This is where you are more interested, Mr. Ramesh.
You're right.
Yeah, project foundation. Then we make the core setups in the project foundation connected to both purchase, project costing, and project billing. Mostly we create only projects here and project units like that. We create basics. I will tell you more about it. Then project costing model comes into the picture. These two are called into the project financial managements. These two come under the project financial management.
PFM it is. Okay.
Yeah. So now we have got into the two categories here. So one is project foundation costing. This comes to the project financial management. It will come. So then project execution management will be there. Two things are there. So now first four will come in the project.
Foundation.
Yeah, project financial management. All the costing, project billing, project control, project foundation. These four will come under the project financial management. Both are coming under the offering called project portfolio management, and that we have got separate areas of we have here project financial
Financial
management.
management.
And this three will come as a project execution management.
So all your WBS and resource allocation and all will come under
Under this
the
project execution management only.
thing you're talking. But in EBS also we had not like this actually. It was called as project costing, budgeting like that. It was classified if my memory is
Yeah.
right.
No, there are
How
some
do you?
modules.
Yeah,
Yeah.
please go ahead.
Yeah. Please tell me. Please tell me a question. You can.
How do you compare? Say, I'm not trying to compare what is EBS and everything. Say, whenever we try to talk about in EBS world, they
Hmm.
always try to give an impression that project module is difficult, it needs to be done. They always try to confuse people with standard projects with project manufacturing. So
Yeah,
I
that
want
is
to,
true.
yeah. So
No,
that is
it
the
is.
reason I am trying to understand that in the current Fusion PPM offerings, whatever the information that are there, it is being broadly classified into based upon the activities that are related. It is classified into two categories. One is PFM and another is PEM. So
Yeah,
PFM is going to be the major activity where we define the projects. Then whatever the project that we define, we categorize based upon the nature of the business that we are going to execute it. And then
excellent.
we associate its cost and also its budget, whatever that is there. And we track the plan versus actuals in the PFM part. Is my
Correct.
understanding correct?
You're right. You're right. You're right.
Right.
The same thing I'm
So
going to explain it to you here,
I'm
because
just
you
trying
worked
to
as a
understand only. Don't.
yeah, because you worked as a project manager, you perfectly understand
I'm
what
still
is there.
working. No, no, I'm still working. And on a lighter note, whatever you are trying to tell, it is my day-to-day activity. So I'm
No,
a user for thing also, but I don't know how the nitty-gritty is. For me to be more effective, I want to understand this. That is a
mm,
fundamental thing.
no, it's true. Exactly what you said is right. Why I'm saying concurring with you is that even I'm going to tell you the same thing.
Okay, sir.
That's what
Sorry
I
for
mean.
other members. I'll just go on
No,
with
no, it is
the
true
next
that no,
part.
no. There should be a batch should always contain, in my opinion, in my teaching experience of the last 25, 30, 25 years almost. I always prefer people with diverse fields and
Yeah,
diverse
that's
knowledge.
correct. Then only we can do it. But
Some people,
sometimes,
no, no, it does not
sometimes
matter.
it affects.
It's a source. No,
Sometimes it affects. Sometimes it affects that only those seniors will
no,
speak.
no.
Actually, I'll go. I will go on you.
It is a chance for the juniors also to get acquainted how to speak and how to ask the questions and how to
Respected, sir.
raise the queries like that. It also
Respected,
helps
sir.
them to learn more.
Respected, sir.
Immediately they may feel that you're just uh, taking away their time, but they need to realize and understand that it is a blessing in disguise for them to have seniors in the batch always.
Some not right,
Anyway,
but still,
anyway,
yes,
it's
I agree.
fine. Let's go into the subject. As you said rightly, the project foundation is the place where we define that. This I will come to that. So these are the areas that are covered into that in this project cloud portfolio management from Fusion Cloud Project Portfolio application management. We learn these modules. These modules are grouped into two things that I have done where otherwise also. These are all the product families. Oracle Fusion Financials is a product family. Projects is a product family. Now they are called offering. Now they are called as offerings. Oracle Fusion Cloud HCM also is an offering. Oracle Fusion Cloud Supply Chain and Manufacturing. They joined put together it is Oracle Fusion Cloud Manufacturing is also another application, another offering. So now what we are focusing is we are focusing on the projects only. See, the current course is Oracle Fusion Cloud Project Portfolio Management. That is the course we are offering here. What is a project? For the freshers I'm talking about, you know very well about it, Mr. Ramesh. A project is a time bound endeavor undertaken to create or evolve a unique product, service, or result. Every project has a definite objective, a definite beginning and ending. They are time bound projects. No project can go without any limitation of the time. So they will have to achieve certain things in a time frame. So that's why a project is to be completed. It should have a definite beginning. It should have an objective, and it should be have a beginning time and also ending time. That's called the project. We can have the categories of projects. Projects by purpose. Project by purpose, we can say strategic projects or operational projects or compliance projects. Like that, we can define the projects. We can categorize the projects. Projects by industry. The projects by industry is construction projects, IT projects, manufacturing projects, marketing, healthcare, and also academic projects. We can have anything, any kind of projects by industry wise. If you want to call that, it is a project by industry. Construction industry can have project, IT projects, manufacturing, marketing, healthcare, and academic projects also can be there. Projects by methodology. You know very well it is a waterfall type of implementation methodologies are there. Agile methodology is there. Lean, Scrum, and Kanban also methodologies are there. These are the methodologies. Waterfall method under waterfall methodology there may be different things. Oracle implementation, AIM methodology, or it is OEM methodology, Oracle Unified methodology. They all come under the waterfall. They divide the project into different tasks or different phases of the application. At the end of the project, project one, requirement gathering, then future business process modeling, then UAT, then go live. Like this phases wise, you can define the projects. Within the projects, they will also manage the projects accordingly. So there are some advantages in this. There are also some disadvantages in the waterfall. Whereas in the Agile, it will not do like that. It will not wait till the entire project is completed or till the entire process or the phase is completed. They will do it iteratively, repetitively. They will do the project management. They will have review meetings repetitively. They make into the small squall um, parts. They will make into that. Each part is assigned to one as a task. Then you will also see that whether the progress has been done there or not. Then project by other categories also small, medium, and large scales, or short-term plan project, or mid-term project, or long-term project, research and development projects, business projects, like that we can categorize. These are the different categories we come across when we say the projects. Now, mostly we are concerned about this project account. Here we are going to cover is the about the construction projects only, types of construction projects. The project series we have got manufacturing, construction projects are also there. So we go mostly with the type of construction projects as our examples and other things. So in the type of construction projects, we have got three types of projects. Any company or any organization that is doing projects for themselves, capital projects. At the end of the capital projects, they will construct an asset for themselves. At the end of the capital project, the organization gets a gets an asset gets an asset because they are constructing an asset for themselves. At the end of that, that's why they say it is a capital project. They take up a project. Suppose there is university, they want to build an auditorium, they want to build a college campus, they want to build an administrative office. So like that, these are all buildings that they, at the end of the project, what is coming, they're getting an asset for themselves. So that is a construction project for that. So now contract projects on the other hand, once we complete the contract, once we complete the projects, the in the contract projects are taken up for a client. We construct an asset, construct or build or perform an activity and bill a customer and bill a customer. At the end of the day, we get the revenue. We don't get anything like that. At the end of the project, we get revenue from out of this because we are selling our services or we are selling our product or anything that we are doing it to the revenue we are going to generate at that project. There are indirect projects. These are not specific to certain thing. Indirect projects are not for any particular thing. So the costs incurred on the indirect projects are spread over a period of time or spread on different activities. On different activities. Suppose now we are training IT people. When you train the IT people for 6 months time, your employees, they are not going to work on only one particular project. You may have around 10 projects. So these people will work for all the 10 projects. So what are the amounts you have spent on these indirect projects? The cost of that is spread across all the projects that they work. So that is how the cost of the indirect projects are spread across the several projects. These not meant only for one project. Indirect projects. Indirect projects are the ones that amounts we spent on the indirect expenses like training or advertising or advertisement are allocated to different projects. where the resources work or where the sales are increased. By doing an advertisements, you may get different things like. So if it is only you are training the employees, those employees will work on different projects, and those projects you will be able to generate revenue. Those projects will generate revenue. So it's indirect cost on the projects. Same way, the advertisement also, when you do advertisements for different projects, you spend one hoarding. You will say, we have got Tata Motors, Tata so many product, other vehicle, this vehicle, all vehicles you will put into that. So one advertisement will get you the profit on different products. So these also advertisement costs and other training costs are allocated to different products. So there they will get the revenue out of it. So these are the three kinds of projects when you define. Where like that we'll have to keep these kind of projects in mind. Mostly these are all for the construction projects. Yeah. Any doubts, Mr. Ramesh?
Point was, see, what are the projects that you told, for example, the resources are getting distributed based upon the nature of work.
Yeah.
For example, I will have a training in cost that needs to be done. For example, I provided training for Java, or like this, I provided training to a set
Correct.
of consultants on the project's module.
Module.
After the training, then we put that particular resources as a shadow resources to understand what is that particular project, and also training is done, then onboarding of that particular person into the project, and then they start doing the activities associated with the project. Now
Correct.
if I really look into it, I have three set of tasks that is done for a person. So if I'm going to track their effort or a timesheet on that particular activity, these three activities will tell me, line items will tell me that a two are a thing based on like an investment, and the third one only will be the direct billing that I can do it against the thing against which I try to get a thing. So which means overall cost that is there, in which overall three activities are there, in which one item will be giving me the revenue, and two items will be the overall cost that I have incurred on them. And on top of that, we have the overall salary costs or anything that will come to the overall associated cost center or anything that is there, which I'm not getting into that detail. But if I
Yeah.
onboard this particular person, two items are related to the investment that I made for them to onboard them into a project, and then they start getting into the revenue. Only one particular task is a task that is associated with the revenue. That comes only after a period of 6 weeks of initial onboarding, and with a seventh week onwards, you try to do the same thing. It is also applicable even if it is going to be in any industry that you talk about. It is only the nature of the classification of the project, whether it is going to be, even you talk about an advertising part. For me to complete an advertisement coding on that, first I have to group the people, then I have to do a workshop how the advertisement looks into it, like on the roadside you do it. That is one type of advertisement. Another thing, a piece of 5 to 30 seconds ticker that comes in, or a small show of 30 seconds or 1 minute show, like. So that is also treated as a project. For me to deliver that product, I have to work 3 months or 1 month, and then once it starts coming up, then the revenue will start coming based upon the subscriptions or the viewership that is being looked upon, or the timing that particular ad is being viewed. So how do you classify this particular thing? Even though I know that it is also an indirect project
No,
or
no,
a contract, I'm
you
not sure on
see,
that particular.
in
Yeah.
totality, they will take the project is taken up. The project can have different ways of advertisement. They can go for
Okay.
hoardings, they can go for TV advertisements, they can go for what are the costs they have incurred on that project.
Correct.
So the total amount will be distributed to different products.
This particular thing, will it come under indirect project or a capital project? That's what I'm
Which
trying to
indirect
understand.
project? No, advertisement is an indirect project.
Got it. Okay.
Advertisement is an indirect project. Your resource training also is an indirect project.
Okay.
Directly, they
Now
are
that
not
will be
getting.
clear.
No,
So
directly
billing
they
means
are not
if I
generating any. Yeah. See,
right.
you may
So
bill it.
after
You may
doing this
deploy
particular,
you may deploy 10
uh,
people to a project, but you cannot say that per employee, when I'm billing, his cost is this much, for training cost is this, his onboard, waiting onboard like that.
you can't build the
On
customer. You can't build the customer. You
yeah,
can't build
that's
the
what.
customer.
But you bill the customer, overall billing will be done. You do the billing, definitely you will have to do the billing. But when you do the billing, you cannot do per resource. You do that for billing purpose. How many people are working in this project? how much money I will charge per man, per person. Like that you can bill. Time bound also is there, right? So
So
for
that will come under indirect projects, or will it come under that? That's what I'm trying to
no, the
understand.
training will come indirect project only.
Billing to the project, billing to the customer, where it will.
Billing to the customer.
Yeah, it will
No,
fall under which category?
no, billing to the customer. Billing to the customer is depending upon whatever the billing types you have got, whatever the agreement you have got it. Whatever the agreement you have got
Okay.
with him, according to the agreement you will bill him. Is it time and
Okay.
material basis you are doing, or you are the percentage of completion? I'm coming to that. I'm coming to that.
Okay, sir. Okay, sir.
So, yeah.
I'll go on mute.
Yeah, yeah. So now Oracle Fusion Cloud Project Portfolio Management includes the following two offerings. Mainly it is offering the offerings. So now it is project foundation. In the project foundation, what we do is we do the basic setups like how to create a project, and we create the project units, etc. setups, and also we also create expenditure categories and also revenue categories. The expenditure categories means it will again come into the expenditure type and expenditure class. What are the expenses that you can book for the project costing purposes? So those are to be defined. Employees costing and also your material costing, or your other any other indirect costings, like that everything the expenditure types are to be defined in the project foundation, and those types categories and also the projects will that cost categories also will be taken into the account here. It will be coming into the project costing module. Similarly, revenue categories also will be there. Those revenue categories, what you define in this project foundation application, they will be used for the project billing purposes. Here we capture all the costs we incur the projects. It is in the project costing. Here we capture all the costs we incur for the projects. It is integrated with the procurement application, inventory application, accounts payable, expenses, because the entries flow from these modules to the project costing application, general ledger. But because the inventory application will go to the general ledger, what are the amounts you have spent for the project, right? That's what are the employee related expenses you put it there. And if the people are working from HRM estimate, some two, three people are working on two, three different projects. A few of the employees they may supervise two, three projects. They are not the full-time employees on the project, but they come there for 8 hours, 5 hours, 6 hours they put into the project. So that their uh, time cards will be uploaded into the system. They will be imported, and we'll have the rate schedules for each employee. What is his capacity? What is his caliber? How much is his billing rate? So those time cards will be imported into the system. System will calculate the employee's cost, how much time he has spent, what is the rate. That's called costing also. From Oracle time and labor also we get the integration to the project costing application. So costing means to say how much you have spent on the project. That's the main aim of the project costing. That's what all sources of. You may use material, you may use invoice vendors invoices you may pay, you may engage some consultants, right? You may take the part-time employees of your own company, they may work on that, supervise it. All that comes under the costing, project costing. Totally, how much I have spent on the project, that's called the project costing application. Project billing application, on the other hand, it will have we raise the invoices. We bill the customers by generating invoices as per the contract based on invoice methods. So we bill the customers as per the agreement. Yeah, as per the contract. As per the contract. Agreement we call them in EBS. Now we call them as contracts here. We have a contract between us and the contractor, and when I'm going to bill, what work I'm going to do, how much advance he is going to pay me, then what is the work I'm going to do every month, the schedule. So like that, you will also have the billing schedule. That's called revenue. Also here we can have the bill methods, invoices, contract based on the invoice methods, like account based, like amount based. How much amount you have to bill him, and also will be there rate based. Rate based means it comes as you said. Suppose I am supplying you, yours is an IT project. You do not have people. I am going to assign my five members team to you. I bill each of the members for each rate. Project manager, I will charge $100 an hour, right? Then project consultant, I will charge $70 per hour. Like that, we'll give the rate schedules. So like that, it is rate based means per employee, per resource, how much I'm going to charge. Like that, you will also say that this is on the rate based and percent based, based on the formula. Percentage based means how much percentage I should bill you for going to any event or something, or percent completed. Suppose if the project has completed 75%, I can bill you as per the contract. If the contract is for $100,000, so 75% is completed, I am entitled to have the 75% billing. I will raise an invoice on you for the 75%. So what all the percentage previously you paid it, the balance up to 75% amount you are not pay to me. So like that it is there. Invoice methods are used for billing the customers. How you bill the customer. And revenue methods are used to recognize our revenue. They both are two things. They are, both will have the same names only, but if they have the same names also, you use billing for customer billing. You use the invoice methods. You define both invoice methods and also the revenue methods. Will have to define them. So according to those methods only, you will have to bill the customer. Revenue methods include all the four invoicing methods and include two more methods called as billed, billing in advance, and as incurred, billing in arrears. So this is how we bill the customers. That's called project billing method module. Says all these things: how to bill the customer at what event or at what stage, periodic basis, cost plus basis. Cost based place also you can take up the project. Always you can take up what all I spend it, 10% add on for me. So like that you can say cost based also you can method the billing methods can be there. Then in the project control module, these are the modules of the same offering. Project financials management is an offering. In that we have a project control. Project control is an module or application. Here we define project plan type. Project plan type means how the project has to be structured. Work breakdown structure. We call it as we used to call there in the previous versions work breakdown structure. But now in Fusion we call them as a project plan type. This entire project is divided into tasks. Task 1, task 2, task 3, 2.1, 1.1, 1.2, these things like that you will define. And in the project you also will have some dependency tasks. Unless you complete this, other person will not be able to complete the other one. So those tasks also you will do that. So you will define all the tasks into the project here. So plan type is used to define budgets and budgetary controls also. Based on the project plan type, you know the project plan type. What are the tasks are involved in the project? So there is a project plan will define the project tasks. So when you say project tasks are there, for each method is here, right? Plan type used to define the budget. Each task, how much finance is to be allocated. To complete this task, how much money I needed. So based on that, again, you will have to do the budget. So you budget according to the tasks here, and so you can enforce the control also, budgetary control also you can do that. That's what the project control module is. So project plan type helps us plan and monitor the progress of the project also. When you have got the tasks arranged and you give the time limit for each of the tasks here, project plan type also helps us monitor the progress, whether that particular task has been completed by within the time frame or not. So that's what the project control will help us to have all this information. Any information you want, Mr. Ramesh?
I'm saying, is it only for two of us the session or how was it, Sudarshan?
The other man is there, right? Other person is came.
Only two of us, Yogananda and myself. Okay,
Yeah, only for two people have come today. Today is Saturday, right? Depending upon their choice, they will come.
okay, bro. Thank you.
So now the project execution management will come under this also. You will have three things under these three applications. You will have it here, or functional areas you can call them. In this offering, you have got the functional areas like project management. We create a project task for the projects tasks for the project. We create any project. When you say the project is nothing but a combination of several tasks, you split the project into different tasks for the projects. Project plan definition. That's called project task, means you will define the project plan definition. Then also you define the task dependencies, what all the tasks are depending on each task. Allocate the resources for each task. Project management means you will have to allocate the right resources for each task and constantly monitor the progress of the project. Then project management focuses on the overall planning, execution, and completion of a project. Project manager role is his job is to ensure that the entire project is closed, not a particular few tasks are over. He has to ensure that the overall project is done, completed in time. It comprises multiple tasks and resources during the entire life cycle of the projects from the start to the end of the play. The project management is task like that. From the beginning of the project to the closure of the project, this is the role of the project manager to manage the project. The task management, on the other hand, focuses on the individual components or work items that make up a project. As we said, the project is already divided into different tasks. So each task may also be depending upon some other the dependency tasks also will be there. So when you manage the task means, so you are particularly focusing on that particular task. Resource allocated to the task, so he will focus on the task management. Whether he is completing it within the time frame or under the supervision of the project manager, so he will have to guide the resource allocated to the task also to complete the task within the time frame. So that is called the task management. So task level is this is his interest is mostly to complete his task first, whereas the project manager task is to complete the overall project within the time. There is the difference between the project management and the task management. Then you have got the project resource management. This project resource management is a process of planning, acquiring and managing the resources. This is the process of planning, acquiring the people to the project. You have to plan how many people you need it, and acquiring the people also into the project, and managing the resources, including people, equipment, anything that you need, material, and budget to successfully complete a project. It involves identifying resource needs, allocating resources to tasks, tracking their usage, and ensure they are available when needed. Effective resource management optimizes utilization, reduces costs, and improves the project's outcomes or profitability. It will be increasing that. So this is also in the project management. When we say you have to do the overall project management, we need to do the task management, and we need to also do the resource management also. If the work is completed within time, then you will be saving the costs. If the if anybody is not coming into the project, if you allocate one resource to a particular task, he is not able to complete, you must be able to manage him, and you will have to change that particular person who is not doing well. You will have to get a new resource into the project. Replacement of the resource is necessary in order to complete the project eh, on time. So like that, this is how the projects are going, or all the applications work here into this. In addition to this, we have got also another offering called Oracle Fusion Grants Management. The Fusion Grants Management is another kind of application. This works purely on the grants given by one organization. Either it is a federal government, or it is a state government, or any other agency. They will give you a grant to work with. So there also we create it as a project, and we say that funding is the grant. What are the amount we receive from the government, or what are the letter of intent that the government wants to fund us our project, that they will give us a grant. We'll create a project for that. So will funding source will be the government or any other person. So you raise invoices on them, and they pay the money against your invoice. Then you will spend the money accordingly. Project costing one. So this can be some of the organizations who receive like this grants are there. higher education organizations such as universities and colleges, state and local government organizations, non-profit organizations, and healthcare organizations. These work also the grants management. So grants management also, though it is not a module within an offering within the project portfolio management, this is also closely related to the financials and also to the projects. Here also we define the tasks. Here also we allocate the resources. Here also we will have the project manager. So all the activities that we do it. Here also we do the billing the clients, right? Because whatever you spend it here, you will have to account for it. So now project costing also will work here. So you spend money and also you will bill the client. That means for the reimbursement of the funds or anything that he will do that. So like that, these also project grants in all three, two